California wants to give you another shot at $150,000 to help you buy your first home through the incredibly popular Dream for All program in 2026. Now, CalHFA's Dream for All gives first-time homebuyers a fast pass to homeownership by giving you either 20% or up to $150,000 in down payment assistance through something they call shared appreciation. And last year, over 2,000 people got selected through their new lottery system, and it took nearly a full year for everyone who was selected to actually use it. Now, you've probably seen the headlines about the California Dream for All program running out of money all the way back in 2023. But in early 2026, it's coming back with a few important changes. Now, I've personally helped dozens of families use this program successfully to buy their first home. And what we've learned is that it isn't just luck that gets people these funds. It's knowing exactly how the program works and being prepared when applications open up. And in this video, I'm going to show you the key features of this program that'll help make home buying a lot more affordable next year. How some of the new changes to this program will impact who qualifies for it, and ultimately whether or not you should consider using this program to buy your first home in 2026. So with that out of the way, let's jump into it. All right, so for starters, what exactly is the California Dream for All program? Well, for starters, the California Dream for All program is a state-run initiative that provides a significant down payment assistance to first-time homebuyers in California. Now, this isn't just a small grant either. We're talking about up to $150,000 or 20% of your home purchase price, whichever is less. And so think about that for a moment. In a state where the median home price is well over $800,000, getting 20% covered by the state can be the difference between you continuing to rent forever and actually being able to afford a home right now. And for a lot of the people who I've worked with personally, it absolutely was the difference. Many of them were in a position where they could reasonably afford a monthly payment, but they just didn't have enough money saved up for it. And so by getting the money from the Dream for All program, they were able to not only afford a home realistically in the markets that they want to live in, but they were able to fast track that a lot sooner versus having to wait up to save that much money. And even if you already have that money saved up, if you're in a position to qualify for this program, I think it's a smart move to at least use this program to save some of that money in pocket, especially during this kind of economy that we're going through right now. So how big of a difference does the Dream for All program actually make when it comes to your monthly payment? Well, the results might surprise you. Let's assume that you were buying a $750,000 home. That would give you exactly a 20% down payment using the maximum of $150,000 with this program. Let's compare that to, say, doing a normal conventional loan with 5% down. If you were to put your own money down using 5%, that would give us a down payment of $37,500. Meaning that you have a loan amount of $712,500. And given a 30-year mortgage conventional at 6%, which is where interest rates are today, including taxes and insurance and mortgage insurance, because you're not putting 20% down, that would give you a monthly payment of about $5,300 a month. Now, let's take that same $750,000 home, but put 20% down using the down payment assistance program. What's great about this program is the interest rate is exactly the same as if you were to put your own money down. So a 6% at 30-year fixed on a loan amount of $600,000, you don't have mortgage insurance, right? Because you're putting 20% down, that would give you a total monthly payment of about $4,400 a month. So that's a $900 difference in your monthly payment, all because you used this program. Now, I think that 2026 is the perfect time to use this program as well, because not only do you have to deal with your down payment, you have to think about your closing costs as well. You see, the Dream for All program does require that your mortgage lender charge you some sort of upfront origination fee. Typically, this ranges from anywhere between 1.5% to 2% of your loan amount. So assuming that your lender charges you a 1.5% fee, including the title, the escrow, and all of the different things that have to come with your closing costs, your total out of pocket using the Dream for All program for a $750,000 home would be roughly $23,000. Now, compare that to putting your own money down and covering your own closing costs. That would mean you'd have to come out of pocket right around $50,000. And right now in California, at least, we're in a market where there is a lot more homes for sale than there are buyers, meaning sellers are giving out a lot of closing costs in certain areas where homes are sitting a lot longer. So there's a good chance that if you're using the Dream for All program, you can get your down payment and your closing costs covered, essentially buying a home with nothing out of pocket. And that's exactly what a couple of my homebuyers were able to do just last year using this exact same program. Now, there are some key changes that you need to be aware of if you are thinking about using the Dream for All program. And one of the biggest changes for 2026 is how applicants will be selected. You see, the state is once again implementing a voucher and lottery system specifically designed to increase participation from underserved communities who might not have gotten these funds the last couple of rounds. You see, during the first release of the Dream for All program, certain counties received a disproportionate amount of funding, and the state has this data and wants to be able to spread out the money a little bit more evenly through California this time around. And so that means if you live in a county that didn't receive much funding the first round, your chances might actually be better in 2026. And so how the lottery system is going to work is you're going to get pre pre-approved by a CalHFA loan officer like myself. And with that pre-approval letter, you're going to upload that to their portal when it opens up early next year. Now, the next biggest change to this program is what's called the first generation homebuyer requirement. Now, this is crucial because to qualify in 2026, you must be what's considered a first generation home buyer. Now, when I made this video last year, they had some different terms of what they considered a first generation buyer. And for 2026, it's going to be a little bit different, which means I think a lot more people are actually going to be able to qualify for this. You see, back in 2024, what they considered a first generation home buyer meant that you personally have never owned a home. Not only that, your parents couldn't have owned a home in the last 10 years. So that meant even if your parents owned a home like 5 years ago and they sold it and they're not homeowners right now, that means you wouldn't have been able to qualify as a quote unquote first generation home buyer. But in 2026, this is changing. Honestly, I think it's changing for the better based on a lot of the complaints that people had about the program last year. Now in 2026, the requirement is kind of the same, right? Where you still can't have owned a home ever in your life. But as far as your parents go, they just can't own a home currently. There's no requirement for a certain amount of time. As long as they don't own a home right now, you are considered a first generation home. Now, additionally, they also consider a first generation homebuyer any individual who's ever been in foster care or any sort of institutional care at some point of their life. And so personally, I think this is a great change to the program and one that I honestly kind of had a gripe with the last time around. I really don't think you should be penalized for your parents having ever owned a home or at least within the last 10 years. So I think it's a great thing that they are changing this requirement and they're not penalizing anyone for whose parents owned a home, sold it, but they never saw a dime. Now, as with all down payment assistance programs, the 2026 program includes some specific financial requirements. Starting with the loan parameters, obviously, like I mentioned before, the maximum assistance that you can get is the lesser of $150,000 or 20% of the purchase price. Now, one of the questions that I got a lot is, can you contribute some of your own money towards the down payment? And the answer is absolutely yes. But there is a limit to that. The maximum that you can contribute of your own funds towards the down payment is a maximum of 5%, meaning you could technically use the full 20% down and you can contribute an additional 5% towards the purchase, making a 25% down payment. Or you could do what some of my other home buyers did and buy a slightly higher home. Let's say, they used $150,000 to buy $1 million home and then they put 5% down, therefore making a 20% down payment. This is a big change from the first time around, which allowed people to put up to 30% of their own money down. So that was crazy. I think that was way too much, but I think this is pretty reasonable considering where prices of homes have gone in the last few years. Some counties, sure, you can buy a home for $800,000 and that's more than enough. But if you live in counties like Orange County, San Diego, Los Angeles, San Francisco, or Santa Clara, right, those homes are easily in the $1 million range. You can still use this program to buy in the $1 million range as long as you qualify. And you can still use, an additional 5% down to make it a little bit more affordable and still avoid that mortgage insurance depending on the price of the home. Now, the income limits for this program are going to vary depending on where you actually buy your home. Now, while the program is designed obviously to help low to moderate income buyers, they also understand that homes are pretty expensive and you need to be able to afford a reasonable amount to actually qualify for this program. So I'm going to share with you the full list of the different income limits based on 2025. These might change in 2026, but it'll give you a good idea of what you should be looking for in order to qualify. And if you want to know exactly what the income limit is for your area, just comment your county and I'll respond. Now, to clarify, the income limits is the limit for the income used on the application for everyone on the loan. But there is a trick to this. If one person makes too much, but the other is able to qualify on their own, we're actually able to exclude that person for the purposes of getting you qualified for this program. So just because you as a household are over this income limit, as long as one person makes enough to qualify and they're still under the income limit, we're able to actually use that to help you get into a home. But like I said, these income limits might change in 2026. So if you're on the cusp or you're just a little bit over, if they update these early enough in 2026, you might still be able to qualify. All right, so how do we maximize our chances to actually get into this program? Well, the first step is start preparing right now. You see, even though registration doesn't open up until early 2026, you should start preparing now. The first thing that I would definitely do is check your credit score and work on improving it. The minimum credit score for this program is a 680, unless you are at 80% of the area median income, therefore it's 660. But for most people, it's going to be 680, and that's a hard limit. So if you're at 679, you're not going to be able to qualify. You need to be at 680 and above. Now, just because this program can give you $150,000, that doesn't mean you shouldn't be saving up either. Remember, you can contribute up to 5% of your own money towards this down payment, making it even more affordable. And even if you're not going to contribute your own money towards the down payment, I still recommend saving up at least 3 to 6 months of expenses just so you have that cushion going into home ownership. Now, one of the most important things that you can do to make sure you're prepared for when the registration portal opens up in early 2026 is making sure that you get pre-approved for a home loan as soon as possible. You see, one of the most important things they're going to ask you to upload in order to register for a voucher is a CalHFA pre-approval letter from a CalHFA loan officer like myself. And so if you need to get pre-approved for this home loan, or you're just simply not sure where to start in the home buying process, click the link in the description below to book a one-on-one call with my team. We'll be more than happy to help walk you through to figure out whether this program is right for you or just get you pre-approved for a home loan in general. You see, the reality is not all lenders are familiar with this program, and frankly, not a lot of lenders want to do it. And working with a lender who actually has experience with the California Dream for All program can significantly increase your chances of success. Not only can we help you navigate the application process, ensure you meet all the requirements, that way you're not wasting your time in the application portal and wondering if you're actually going to get a voucher or not. But when it comes time to actually negotiate on a home, it's important that you have a loan officer who understands how this program actually works and how to get you approved for it during the underwriting process so you don't run into any headaches. Now that we've talked about exactly what this program is and who qualifies for it, I think the next most logical question is, should you use this program to buy a home next year? Well, I think in general it depends, but to be honest, this is one of the first down payment assistance programs that I personally actually like and is the one I recommend almost every California homebuyer to use if they have the opportunity to. Getting up to $150,000 for your down payment isn't a small chunk of change. And as we saw in the examples, that can be as much as $900 a month that you could be saving as opposed to putting a meager 3 to 5% down payment yourself. And even if you had $150,000 to put towards a down payment, I would still recommend you use this program simply because you could keep that $150,000 in your bank account, maybe invest it in something else, maybe even buy another property out of state. While most down payment assistance programs I think are a little bit of a crutch to help people get into home ownership who typically wouldn't get there right away, but they come with a lot of, really big downsides. I'm really hard pressed to find a big downside to this program. Sure, you can argue that shared appreciation isn't really fair to you, but I mean, that's no real difference than paying a higher interest rate on a higher loan amount, right? So you're technically ending up about the same just depending on when you sell. But I think the biggest key factor to why this program is better than any other down payment assistance program is the amount of assistance that it provides and how much lower it gets your monthly payment. And in a market right now where home prices are higher than ever, meaning the loan amounts that you're going to be getting are higher than ever, and the interest rates are higher than ever, getting a lower monthly payment sure feels like a ton of relief. But I will say it's not all sunshine and rainbows, and I don't think this program is perfect for everyone. For example, if you're going to use this program to buy a starter home, not something that you plan on living in long term, I would definitely stay away. The less time that you live in a home, the less time that you're giving appreciation to do its thing and build you equity. So if you're not building a ton of equity in those first couple of years, that means you're going to be giving up a lot of that to the state if you sell too soon. And so if you're not in it for the long haul with real estate, I definitely would stay away from this program because it's actually going to probably end up hurting you a lot more than helping you in the short term. Overall, the 2026 California Dream for All program represents a significant opportunity for first-time homebuyers in California. But I'll be honest, the competition will still be fierce. But by understanding the changes, preparing early, and working with experienced professionals like me and my team, you can maximize your chances of receiving that sweet $150,000 in down payment assistance. Now, if you found this video helpful, make sure you subscribe to my channel for more updates on the California Dream for All program as we get closer to the 2026 launch. I'll be sharing some more strategies and tips and insider information to help you navigate this process successfully. And if you want to learn more about the home buying process, not just down payment assistance programs, you're going to want to check out this video here. You see, you don't have to wait until 2026 to become a homeowner. There are options that are available to you, and it all starts with having the right plan and the right strategy. And once again, if you are looking to get pre-approved, click the link below, book a one-on-one call with my team, and we'll be happy to help. Otherwise, I'll see you in this video